Welcome to Soji Forex. I want to say thank you to all our new subscribers and to our returning subscribers. Thank you for your support to the channel. In this lesson, we'll be looking at mastering and understanding price behavior. Trading is about reaction, and what makes a trader to react is adequate understanding of price. And of course, when we are talking about price, I believe that you know what price is all about. This horizontal line you are seeing here with a reading is what we refer to as price. So as such, a reaction can be of three types: reaction to buy, reaction to sell, or a reaction to stay out of the market. This reaction is what we popularly refer to as the price action. So the way to which this can happen is via candlestick. Now, this is not a physical market. It is more or less a visual market. So we need adequate knowledge. We need better understanding. We need to know where are the market participants per time. What are the reactions? How are they moving the market? The only way this can be communicated to us is by adequate understanding of the candlesticks. So these sticks you are seeing, all of these sticks is what we refer to as the candlesticks. So these green candles are bullish candlesticks which indicate the actions of the buyer, while the red one are what indicate the actions of the sellers. What that implies is that if you will be successful in this industry, you need to understand how this price moves, how the market moves, how the market participants move the market. Then you will join them to move suit in the same direction. And we've established that the only medium we understand the behavior of this market participant is we understanding the candlesticks. So the candlesticks is what communicate the price actions to us. So let's look at what is candlesticks. Simply put, candlestick is a fight, is a reaction between the buyer and a seller. What that simply means to us is that in every candlestick you see, for instance, if this is going to be a bullish candlestick, which is a green candle, just as you are seeing, there is a time the candle begins like this, very tiny as this. The candle have no body. Then suddenly the candle begins to pull to the upside. It will go up and come down. It will go up and come down. It will go up and come down. This action of the candlestick simply depicts the reactions of the traders. It means that buyers push the price up, sellers push the price down. Buyers push the price up, sellers push the price down. Buyer push the price up, sellers push the price down. And then finally, buyers push the price up. And then this candle will now close as a bullish candlestick, which means that this particular bullish candlestick open at this point and it close at this point. So now this particular candlestick communicated something to us as a trader. And what this candlestick has communicated is that this candlestick just showed to us the strength of the buyers in relative to the current price situation. So when I see this type of candle happens, I know that the buyers are in charge as relative to that particular time frame. So when I begin to have a series of bullish candle, I can now conclude from the understanding of a single candle that the buyers are in charge of the market. And if I begin to have a series of a bearish candle, which is the red color candle, I can now conclude that sellers are in control of the market. So on a general note, a candlestick is a fight between a buyer and a seller, and it have two outcomes. It is either buyers win, sellers win, or nobody wins. Secondly, when you look at this scenario that just happened here now, I am referring to this particular candlestick pattern. I'm referring to this candle you are seeing here. This candle you are seeing was formed this way. Now this candle was open at this particular point. Exactly. Where this candle is now, that is where this candle was open. What resulted to the wick, this rejection you are seeing, is what I want to explain. Then sellers entered into the market and pushed the price all the way down. So at the time, this candlestick was bearish in color. Sellers came in and pushed that particular, this candle you are seeing, sellers came in here, open, and sellers pushed the candle all the way to this point. And that is why you see that is having a wick. Then buyers came in and pushed the price back, pushed the price back, pushed the price back, and pushed the price back to the opening price. More buying pressure came in and pushed the price beyond the opening price and take it to a new level like this, and then push the price back and it closes this way. And at the end of the day, this particular candle closes as a bullish pin bar. So what happened is that this price opened here and this candle closed at this particular point. So what this candle is telling us is that here from all the way to from this point to this point now, to this point, is showing us the weakness. It's indicating to us the weakness of the seller. That at the time, sellers tried to push the price down, but they couldn't take it down. Buyers came in and pushed the price up, and the candle closes as a pin bar candlestick formation. And what it's telling us is that for this particular price, buyers are in control of the market. So, having established that, it simply means that if at all you are looking for opportunity to sell before now, seeing that this price at the time came all the way down but was rejected from here and closed as a bullish pin bar, you are already seeing the weakness of the sellers, that the seller couldn't take the price down. Buyers came, despite seller brought it down, buyers came in and pushed it back and closed it as a pin bar, despite the previous bearish candle. So this communicates to us who is in control of the market. That presently, based on these candlesticks, buyers are in control. So when we do this analysis together over time, we can now conclude to say that based on what we are seeing from the movement of this price all the way from this point, bullish, bearish, we have this bearish. They couldn't take the price down, it became bullish again. Bullish, we have bearish. They couldn't take the price down, it became bullish. Bullish, bearish. Sellers couldn't continue, it became bullish. Now indicate that this particular situation, price behavior now indicate that buyers are the ones in charge. Opportunity to buy. This is how we can take advantage of this candlestick behavior, understanding who is in charge of the market. And the third outcome of this behavior is that price can go up, in this scenario, go up, come down, go up, come down, and eventually close in between, and it becomes what? A doji. So what this means is showing the weakness of both the buyer, the weakness of both the seller. It shows that nobody wins as far as this particular candle is concerned, which means that both the buyers and the seller are exhibiting the same level of strength. That is what this particular market situation means as far as trading is concerned. This is a doji. The small candle you are seeing inside the place I just highlighted now is a typical doji, which means that as far as that particular candle is concerned, it is indecisive. This is how we can take advantage of this and incorporate it into our trading as a trader. So now, if I want to trade, I will simply wait, just as I've seen here now. The price is bullish and buyers are in control based on the series of bullish candle, and I can quickly spot this pin bar, pull back into my moving average, and it closes as a pin bar. I cannot decide either to buy or not. So this will be considered in the subsequent video, how we will be making entry based on the understanding of this price behavior. And I believe you have learned something new. Thank you for watching the video to this time. And what more do you need to do is help us to like the video, subscribe to the channel, turn on your notification bell so you'll be the first to get notified whenever I upload our next video. Thank you and see you in the subsequent video.